This is the Friday, September 11th, 2015 version of the Market Plus segment. Joining us now is Virgil Robinson. Virgil, welcome back.
Thank you, Mike. Thank you.
We are glad to have you. And as I mentioned on the program, we did get a question from a follower on Twitter about Milo. And so Jared in Oklahoma is curious. What will China ultimately do regarding Milo imports? Will they end up importing more this marketing cycle than predicted? We planted a huge Milo crop this year. Are we going to find a home for it?
Well, it's kind of a policy issue, and my understanding is that at some point in 2016 or 2017, China will change their policy with respect to strategic corn reserves, in-country strategic corn reserves, and allow it to move towards a more market-oriented value, which would mean the value of that corn, as we know it today, would come down significantly. And if that is in fact the case, then the need for importation would change.
Yes.
And it wouldn't be as strong, Mike.
Because the correlation so far is China wasn't importing U.S. corn, but they found that loophole in the grain sorghum business, and that was really what drove sorghum last year.
And that was policy,
Yes.
taxation and tariff policy. And the same could be said for DDGs. They imported DDGs in pretty significant quantities because of that advantage, at least as compared to the price of domestic corn, which over there is very high because of government policy. Now, trying to outguess Chinese policy is really a difficult task. But I would, at least advise this gentleman that please understand their in-country strategic reserve of corn is enormous. It's large, very large, and if they do change their policy and allow that price to drift more towards a market-oriented value, it will come down significantly and change the dynamic of importation.
So the window for getting our record Milo crop exported really is dependent on when the Chinese might make that policy shift.
That's certainly one of the factors. Now, the other is because of the spike in the price of Milo or sorghum, other growers took it upon themselves to increase production. So I saw today, if my memory serves me correctly, month over month, I think global sorghum production also increased 4 or 5 million metric tons. So at face value, there's no shortage of sorghum globally. And there's no shortage of wheat or corn globally or other coarse grains. So understand there's a very competitive environment that's taken shape there for coarse grain importation.
Okay. Now, should that Chinese window close, should that import stop, what would the impact of all that additional Milo production be on the U.S. feed grains market, in your opinion?
It'd be bearish, and the price would have to come down to dispose of it.
Okay. All right. We'd find a market and clear it.
It's kind of like oil. When you have too much of something, what has to happen? It has to come down in value to clear the shelf, or you have to eliminate some of the competitors and move them to the sideline. So it's kind of a vicious supply-demand scenario there.
Now, speaking of supply and demand, we didn't get a chance to discuss cotton on the program this week. Cotton stocks, ample?
My global days of use is one of the more familiar or common talked about barometers of supply. And right now in cotton, there's 342 days of global use on hand. That's enormous. It's very large. And that factor alone is probably going to prohibit or inhibit cotton prices from any kind of significant price gain, at least for the immediate future.
Okay.
Now, the economics are changing there, so clearly at some point, we'll reduce the production of cotton globally to better align supply and demand, but not tomorrow morning.
And probably won't be this growing season. We should
Probably
anticipate
not.
These prices to stay lower. Now, on the program, we talked about the most recent report that mentioned possible oil production slowdowns in the non-OPEC countries, the U.S. and others. And we've got a question here from Chris in Nebraska. With that in the back of our mind, the idea that oil production will slow at these low prices, potentially cause crude oil prices to rebound, he's curious, with crude oil creeping back up, how would that affect the corn price going into harvest, and particularly looking at that ethanol grind demand with an increasing crude price?
Well, ethanol grind has been pretty healthy, Mike, for several weeks. I don't know that we can increase that significantly unless miles driven and motor fuel used to power those miles driven increases significantly. And unfortunately, we're entering the season where that's not oftentimes the case. Seasonally, we often drive less in fall and winter than we do in spring and summer. So if I understood his question correctly, I don't know that that relationship or that correlation is causal by any means, because policy comes into play and regulations come into play. But if we were to increase miles driven here in the U.S. or globally, that would certainly have a positive effect on ethanol usage and perhaps production as well.
Is there still a fairly strong correlation between the crude oil price and the corn price?
Yeah, there is. There's a correlation, but there again, I would argue it's not causal. There are other factors and variables that come into play, but certainly it's one of the primary factors.
So we need everybody to go buy a big flex fuel SUV and drive it all the time.
That's what people have been doing. That's where they're selling vehicles.
That's true.
Pickups and SUVs.
That's who's moving. Now, I want to circle back to China just briefly. We've got a question here from Trevor in Ottawa, Iowa. We've discussed the Chinese a lot. Of course, huge buyers of soybeans, huge buyers of cotton. They are large players in the global economic situation. And we've heard a lot of reports of their economy slowing down. And Trevor is curious, will China's economy recover? What's your take on the situation in China today?
Well, by recover, I think it'll stabilize, Mike. Now, clearly they have issues and headwinds internally with real estate values and other financial factors. But for us to believe that they're going to return to year-over-year double-digit GDP growth, that's not likely to happen. I think those days are gone. But I do think the People's Bank of China and the Central Bank of China have been very accommodative in trying to stabilize the economy, pump liquidity into the economy, and I think that's been successful to this point. One of the misconceptions I think about China of late is that because of their stock market, their securities market collapsing or pulling down sharply, people need to understand that about 3% of Chinese households have any vested interest in the stock market. The balance do not. Their wealth is in land and in their homes. And while those have come off their highs, I think they're beginning to stabilize, aided by the injection of capital and money by both of the aforementioned sources in China. So I think they'll continue to grow over the next few years at that 5.5% to 7% per annum clip, but not double digits.
Just their economy has matured to the extent that growth is now a little bit more of a challenge.
And it shifted,
diminishing returns.
It has, and it shifted more to a consumer-driven economy.
As opposed to an export-driven
That's correct.
economy. Okay. Now, you mentioned the CBOC's accommodative policies. We're seeing that in Europe. We're continuing to see central banks try to stave off slowdowns in their consumer markets. And this month, here in the next week or 10 days, we've got our central bank meeting to discuss the interest rate increase. With all of these things happening, what's your take on the U.S. dollar here as we look through harvest?
I think at present, and through the balance of the year, it'll remain strong, Mike. I think of the choices investors have, those havens of perseverance, those havens of safety were the best.
Okay.
So I think it remains strong. Interest rates, I don't know. There may be a 0.25% rise here in September. I'm seeing some of the hawkish group in the Fed, however, becoming a little more dovish because of things slowing down. So not guaranteed. It's more likely December or January before there's any increase in U.S. interest rates.
And in the currency markets, as we anticipate a 0.25% bump either September, December, January, how much of that is already factored in for those that don't trade the currencies daily? Would we expect a big jump one way or the other on an announcement like that?
I think there'd be a knee-jerk reaction, but I don't think it would be sustainable, Mike.
Okay.
I think it'd be like so oftentimes is the case. You have a group of exuberant investors that profess to understand and know exactly what the Fed is going to do, they're out of position, and as a result, there's a reaction.
See the soybean, like we saw in the soybean market on Friday, a spike down, comes right back.
You see it in a lot of markets. I mean,
bet.
you know, it's just not uncommon.
All right. Well, Virgil, thank you so much for sharing your wisdom with us this week.
Thank you. I enjoyed the show.
Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so. Tell all your friends, and we will be back next week with expert analysis straight to you. Thanks for watching, and have a great week.